Hey guys, this is Kirk here again at optionalpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. Had no opening trades today, but we did have two closing trades that I want to go over, so it's a fairly light day of activity. Hopefully we should get a lot more action tomorrow as far as opening and closing orders. But really, at the end of the day, I look back on today and the market was down a pretty good clip, which was good. It was actually kind of breaking these successful closing high that we've had over the last couple of weeks. So most of our portfolio is already tilted towards the downside. So that's why we didn't really add anything. We just kind of took off what we did today just to kind of clean up some of the loose ends that we have for some March contracts. And then you can see the April contract on USO that just ended up being a good quick winner. And really everything was going our way. So there's really nothing we wanted to add or get rid of too much today. So just a couple of quick trades. So the first one that I want to go over tonight is the vertical spread that we bought back on RUT. Now this was an example that we used, and this was a trade that I entered in my IRA. And sometimes I enter some of the trades in IRAs and sometimes I do it in my margin account. But this was one that I particularly talked about as an IRA because it was a very wide iron condor on the RUT. And if you go back in the video archives, for those of you who are members, you'll see that we traded a 1200, 1250 call spread, and then also sold an 1100, 1050 call spread. Now this was back when, and I'm going to flip back and forth here, but this was back when the RUT was actually kind of around 1100. So we sold, so we sold a 1,950 put spread. So we were a very, very good clip away from the market here. And you'll notice that the stock market really just basically ran right at our 1,200 strike that we had on the call side. So we got rid of the put side a couple weeks ago and bought that back for about 18 cents, assuming that the market would kind of turn over a little bit earlier, and it didn't. And in fact, it actually kind of breached our levels and went all the way up to 1212. Now, if we had a stop loss in here, and this is why I preach not having stop losses, that would have hit that stop loss out because we were actually running a fairly good loss at that point when the RUT was up at around 1212. But since then, market cyclicality has happened a little bit. We've actually seen a little bit more of a correction in the market. And today, with RUT closing down about 1.25%, they gave us a good opportunity to close out the call side. While not at a profit on the call side, a profit on the overall spread, the overall iron condor. So we kind of legged out of one of them and then legged out of the other one later on in the future. So today we closed out the 1200, 1250 call side trade. We bought it back for a 420 credit. And when we bought it back for a 420 credit, we actually took a loss on this particular side of the trade of $120. So much less loss than what we had just even a couple days ago. But overall, the position made $129. So not a huge profit, but it is a profit. And it just goes to show you that you just have to let the market kind of work itself out and be patient with your strategies and your trades. This is really a very wide iron condor. It was specifically for an IRA so that we didn't have to put up any margin. And it's just a really good use of capital right now. Now, the other trade that we got out of here today was the vertical in USO. So we actually sold back to the market the USO vertical put spread that we had. We bought this for around 97 cents, so about half the width of the strike. You'll notice that this is a $2 wide put spread, and we anticipated that USO would go lower. So this is one of those trades that we have entered a couple weeks ago, anticipating that the market would turn over a little bit sooner. Oil has actually kind of led that lower movement in stocks generally. Oil kind of turned over a couple days ago and it's kind of led the overall market lower. And so as it went lower and USO went lower, this gave us a good opportunity to close this thing out really early with a nice $29 profit per spread that we sold back. So again, that's only per spread. We sold 5 of those. So it was a nice trade that we made, very small in our account size as far as the capital that was used, but a really high return on our investment. So the amount of capital versus what we got back in return and profit, very high return on capital there. If we go to the chart of USO, you can see exactly what I'm talking about here. At this point, USO has really made a huge dramatic drop lower just in the last 8 or 9 days here. So we don't want to risk it here and assuming it's going to go even lower than it already has been. Really what we wanted is we wanted to kind of close anywhere below 36. That's where our break-even price was when we originally entered this trade back in February. So at this point, we're down below that level. That's all we expected. We just wanted an opportunity for it to come and trade below 36. And you'll notice that since we entered the trade, I believe it was back here in February, we really didn't get that opportunity all the way until the last couple of days. So we had to kind of wait and be patient. That's what the whole name of the game is about, is being patient, keeping your trade size small so that you have an opportunity to let USO go all the way up to basically 37.60 before it kind of crashed down almost $2. So that was a great trade. Good opportunity here to take money off the table and move on. As far as the general market's concerned, I'll just go to the E-mini futures. Basically what we have is we have the market finally making a day where it's consistently moved down. We've had a lot of days in here where stocks would trade lower in the middle of the day and then close higher. And that was kind of the name of the game all the way through the end of February and into March. But now we're starting to see that it's actually closing lower than its opening and obviously closing on downward pressure. So we have some of these big red candles that are starting to pop up on the charts. The only thing that concerns me about if this market will continue lower, and I obviously hope it continues lower, that means increase in volatility, that means option premiums swell. That's when we make our money, right? But right now, the market has clearly tested this old area of resistance that it ran up against back in December and January this year. So you'll notice how it kind of hit its head up here a couple times, right around 1840 or so, traded away from there, and then broke through that level here in March, and has now come back down and retested this area as support. So tomorrow will be very interesting to see if we break this level and continue lower, or to see if we actually just bounce off this level and then the rally continues from here and we go and rally on through April expiration. So again, it'll be really interesting to see what happens tomorrow. I think it's going to be a critical day. I think 850 is going to be a critical level to close out on Friday. So whether we close below that level or above that level will kind of set the tone for where we go next week, in my opinion. So again, make sure you keep your trade size small. Keep adding positions to your portfolio. March is almost done next week, but that doesn't mean that we can't keep adding April trades, and that's exactly what we're going to keep doing. So again, hopefully you guys enjoy this video. As always, if you have any comments or questions about the trades we made here or anything else in the market, please add them below this video. I'll get back to all those questions and comments tonight or tomorrow before the open, and happy trading.